power hour or whatever they call it, is folks that lost their ass throughout the day. They're trying to make it back, or they're trying to do something to make up for it. Or you just got some guys that are just sitting here, absolutely going to take some more. I don't know. But that's a good time to do it. And you can draw that 3 o'clock box. But just know 1 hour after that, you're drawing a closing range box. So don't expect a whole hell of a lot to come from that 3 o'clock hour deal, I guess is what I'm trying to say. Because the majority of the meat of everything has already been done. There might be a trade here, but you can dig yourself out a little bit if you needed to or whatever. So you can draw that 3 o'clock box, but just know you ain't gonna be getting a heck of a lot from it. Not like you would these others. All right, so we've drawn all our boxes on the 1 minute chart. Now let's flip to the 5 minute chart. I like to kind of give this thing a little bit of context, right? We've done everything on the 1 minute chart, so now we need to flip out and let's just try to find us something that's going on a 5 minute chart. It's a little easier to see, a little easier to understand too. So if you I don't know if you come from my parts of the country, there's a little saying called the early bird gets the worm, and it's never been more true, especially when coming to the markets, right? To me, 3 o'clock in the morning, 6 o'clock in the morning, and 9 o'clock in the morning, they'll offer you the best opportunity to make some serious money. Get yourself positioned for some serious money anyhow. Everything after that becomes smaller increments for the most part, but you'll see that a lot, especially when you start drawing up these boxes where the most amount of opportunity lied, and it was early in the morning. So maybe whoever thought of that might have known what they was talking about, I guess. But anyhow, back into these boxes. If you find yourself in these where these boxes come into play, right? The 3 o'clock hour. Well, y'all know the work, right? Y'all know the Bollinger Band strategy. It's something I do a pretty good bit. But anyhow, if you look for into these boxes, into these, this is where the opportunities are typically within this rotation hour of this box. Definitely the closing range part. But anyhow, that's just where for these Bollinger Band setups, right? And you can look at them on a 5 minute chart. You set your levels from a 1 minute chart, but then maybe look on a 5 minute chart for Bollinger Band setups that you can set in for a little while. The higher the time frame, really, if you're trading intraday, it's hard to go past a 5 minute, right? To watch anything develop, because next thing you know, the day's over before you get it all done. But 5 minute works pretty good, especially for intraday. So yeah, y'all know the deal. I'm gonna do some boxes here. We're gonna try to find us some Bollinger Band setups. Well, we got price that come down into that 3 o'clock hour, right? Well, we've made a low. We poked the Bollinger Band. Now we made a lower low, so we know we got to box that candle right there. That's the one that we box. Okay. And let's do that one in a wild color here. Let's do it in red. There we go. So we know for a fact that the 3 o'clock hour offers us some type of rotation. Well, price was coming down, 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 and it's starting to rotate up right around that 3 o'clock hour. Well, we're looking for the Bollinger Band setup, right? And sure as a shit, here it comes. You had your lower low, or you had your low, then you had your lower low. All right. Well, that was your Bollinger Band box. Well, you just set your 3 o'clock in the morning or 3 a.m. box right there with it. Okay. And you know the deal, right? We're looking for A+ setups. That's what we're looking for. So price goes up, price comes back down. At 4:55 in the morning, you had a puncture of that Bollinger Band and that box. Not the Bollinger Band box, but you had it of the 3 o'clock, 3 a.m. box. So you could have literally took a long at 4:55 in the morning, right there, 580 at 580, knowing good and well that we just come up out of. Now, you guys got to know also on some of my other work, you guys know I don't never, I always talk about a retest of something. So if price fell out of this closing range and never come back up into test it, well, likelihood of us coming back into retest this closing range is very, very high. From all the work that I do and all the work I've done over the years, if I'm taking a trade down here, I am always going to target the closing range if we didn't retest it, right? And if we get above it and we never retested it, I am going to try to look for a short somewhere and in a retest back into this box because that's the importance of the closing range. So anyhow, so you took your trade right here on an A+ setup of a Bollinger Band setup. So you had a price come above. Think of this as support and resistance, this 3 o'clock box. Okay. Once support is broken, once resistance is broken, because it was resistance, it comes back into it for support. Okay. There's one level of, or that's one idea to take a trade long. All right. The second idea to take a trade long is you had a Bollinger Band set up. So there's you some confluence, right? Well, you had the cloud also go from purple to teal, blue, whatever you want to call that color. So there's you some more confluence. We never retested that closing range. There's you some more confluence. So that's what I'm trying to tell you. Build you a case to go long right here. All right. And you would have known all that right here. You wouldn't have been rushed because, from the setup, even just from the 3 o'clock in the morning, that's nearly 2 hours that you sat there and waited for this long. So, you had plenty of time to think about it, But anyhow, that's what you target. Target the closing range. You didn't have to go all the way up there to the very, very top. But look at there. You're talking 5 o'clock in the morning from 580 to 680, basically. Almost. That's almost a 100-point move. For most folks, even open their eyes in the morning. You'll see that kind of stuff happen a lot. Maybe not a ripper like that, because we've been experiencing some pretty good volatility as of late, which is nice to see. But maybe not quite that much. But nonetheless, you would still target that closing range. But not, obviously you'd want to pay yourself along the way, if you took this with multiple contracts, maybe take some off going into that 6 o'clock hour because, hey, that does offer some rotation. It just so happened that rotation was up as well, but, that's how you could have played that. Maybe took you one off at 13.75, you know what I'm saying? Take you one off at half of that, or I don't know how many you're trading, but I'm just saying that's the way you could play that. Take one off at 6 o'clock hour because that's a smart thing to do, knowing that the market typically has, a lot more participants come in around that 6 o'clock hour, so you don't really know what it's going to do. But right here, you knew kind of what it was going to do because that should have been your support resistance level, in which it was, but it broke support. Broke resistance, come back into it, and made it support and took back off to that closing range. But anyhow, that's exactly how you could possibly do that. Let me go ahead and delete this. But anyhow, that would be how you could took a longest off that 3 o'clock box and felt good about it, right? So, and that's how you could have, played a role into the Bollinger Bands, knowing that you're looking toward them boxes, them rotation hour boxes for potential Bollinger Band setups, and that's how they can all play out. But that's not saying that you can't make this a standalone trade either, Say you was goofing around and you forgot to, and you just didn't look at this. And how could you get involved in this move up, right? If you didn't get right here. Because it don't always happen as pretty as that. But anyhow, you know the deal, right? Um, support is broken, or resistance is broken. Excuse me. Pulls su- Resistance is broken, pulls back into support and takes off. Well, it took off right here, and here's your rejection candle, right? We always talk about the momentum plays into the cloud. Well, right here it is. You could got long off this candle. If you didn't want it and you wanted to see that rejection, well, get long the next one. You know what I mean? Because that was a clear rejection. That was a clear rejection. But nonetheless, that's how you could have got long into the cloud and still, still been targeting the same thing. You know what I mean? Because that retest never happened. Um, so that's how you could have took advantage of that. Um, let's say let's say for whatever reason somebody slept late and they didn't get up in time, for all this stuff over here, and you was late. So we're looking at you. You've already seen this move happen, and you feel pretty desperate to make something happen throughout the rest of the day. So you see, let's see this 9 o'clock box get drawn. This is kind of the area in which obviously you're looking for bullish behavior and you're looking for bearish behavior on down. You could have seen this bar, right? It's been a pretty tough trade to take, but you could have. There's no doubt in my mind, but you could have targeted. So you've seen this big move down, right? And then you've seen it pull right back, but get sold right back off. You could, once it closed below this box, a retest of that box is a valid short because I mean, at the end of the day, that you had price come up and make that 9 o'clock box. Well, that is support. But once support is broken, it becomes resistance. There again, price come down, come back up. That's a risky trade, but you could take a short right there off that box with very little risk. You're talking 703 to 709, but you probably wouldn't have put your stop there. You'd probably put your stop just a little above the box to make it make sense. So maybe 10 points. But yeah, you could have either A, targeted the Bollinger Band, or you could have targeted this 9 o'clock or this 6 o'clock box, right? You know what I mean? From the 9 o'clock box to the 6 o'clock box. Either which way. But, you know, if you took two short, you sold one off into the Bollinger Band, which would have been, you know, right there. And say if you took another one, you could have sold it off down there into that box. You know what I mean? And if you was, which that showed to be support. So I mean, I don't know, it would have been tough to hold on to the rest of them, but you could have, held one more and just, brought it down to this lower high and sold the other one right there. That's one way to play it. That'd been a tough play. That particular one would be a tough play. Let me get rid of these guys. And the but technically you could have got yourself involved right here on a Bollinger Band setup. So I'm trying to go through like mix the Bollinger Band setup along with these 3 o'clock boxes, right? How to utilize both. You know what I mean? That's kind of what I'm doing here. So if we're looking for the Bollinger Band strategy, obviously, um, and there is a potential spot that we could get involved. Okay. Well, we never really got that. This is a long setup, right? If we're looking at this thing, and this is kind of the spot where you look at it, right into some of these boxes, pretty close to them. But price just continued to make lower lows, right? And then it just never ever actually worked out too well. So the only actually over under setup you could have had would have been right here. And that's not a bad over under setup either. I don't think you might have gotten filled. You would have got filled on a little bit of them, but the idea, right? The over under is, you wanted to see that up. Technically you'd want to see price come. Uh, hold on one second here. Let me. Somebody's hopped in here and is not muted. All right, I fixed it there. Well, I thought I did. Sorry, guys. There's folks not doing their mic checks here.
It's whoever the Batman guy is.
Oh, I think we got it fixed up there. Okay. So the over-under setup, back to her here. I'm sorry. Sorry about that, fellas. The over-under setup would be something like this right here. You'd want to see price come down. You'd want to see price come back up. That's a potential over-under setup right there. I don't really, I wouldn't have took that one right there because it's just, it was a lot of busy stuff going on right here. You know what I mean? There were a lot of up and downs, up and down, up and downs, and price really never got away from that box good enough, right? That's the ideal over and under that you would want to see. Something that was really close, but yet price come off of it and then come back into it. You know what I mean? It gave a little bit of daylight right there. You know, this is your daylight. You know what I mean? Let me see.
Yeah, I have a quick question, if you don't mind.
Hey man,
The 930. I was drawing a box on the 930 candle. Using that as my opening range, and on the 1 minute chart, there was a clear test of that box. Should I stick with the 9 o'clock and not draw the 930 box?
I mean, you can trade the opening range. It's just the opening range is probably the least important box on your chart. I mean, it's important, but especially when it's inside your closing range. You know what I'm saying? Like, it doesn't, there's no big gap up. So basically, it opened right where it closed. You know what I mean? Is that making sense to you?
Yeah, that makes perfect sense. Thank you.
No, no problem, man. Like I said, that opening range, it's tough because there's a lot of imbalance going on right there. You know what I mean? It's that, from the overnight that's trying to get corrected. So just be mindful of that. Closing range is just a desired closing price, that people felt comfortable of holding on to the positions on an overnight basis, Anyhow, let's see here. I'll get right back to this. So this was not something that you really could have done an over and under setup on. However, when you seen price come back into this box and then come back into this Bollinger Band box, you could take a short right here, target 13.75, right? And also target the box below it, right? Because you never, ever broke that to show that it's support, right? You actually just come up into it and shown it to be resistance and went right up into that box. That's not an A+ setup, but that's an A setup. That would be in your short. You wouldn't have never got filled on that one down here at this box, but assumingly you would pull your stops, somewhere downward a little bit. I don't know. Granted, keeping it right on the right dead on the money of the box, that's probably not a smart idea anyhow. You want to pull it off of it a little bit, because sometimes this stuff gets front run, especially if you got a lot of people looking at the same stuff. So just be mindful of that. But the whole rule set of you cannot delete a box, right, until it's become an A+. Well, technically, this would have been the A+ right here, And if you would have took the short right here, you would have lost. Okay. obviously. Well, there's one thing that you need to take into account right here, and this is where these boxes come in to save you, and they give you context, right? Once support is broken, right? If you know the candle's closing up here, don't take a short above this box, right? Right here, you could took a short, you see, because we never closed above the box, right? So when we closed above that box up here, you would already know, hey, I should not be taking this A plus right here because the box said this is actual resistance and we've just about made it supportive, right? Or that's what we're coming down to do is make support of it. So once resistance is broken, don't take that. Do not take it because most of the time you'll find yourself in a bad spot. And right here, you would have found yourself in a bad spot. And also taking into account of, okay, well, we broke that closing range again, and we never retested it. Well, you could have been headed right back into here to test it, and which it did. But nonetheless, that was when you would have deleted this red box. Now, granted, it would have showed itself back up over here, and that would have been a great spot to take along. But that wouldn't have been the thing to do because that right there will get you trouble more than it'll help you. The way that you could have took advantage of this would have been over here, but this is getting late, pretty late in the tooth where, really all your money was already made way back here at 3-6 and, really after, that 12 o'clock deal, right 12 o'clock, excuse me, 9 o'clock. That was where some of the money could have been made. And this is where you can link some of this other stuff together. You would have had an order sitting here thinking, okay, well, price maybe come back down here and hit this box. I'd take a long up to this 12 o'clock box. Well, it never worked out. So you could take, and some of my other work would tell you, hey, take a long off the Bollinger Band poke if the cloud is, bluish or teal, whatever this is. Take you along here and sell it up here to this upper Bollinger Band. So you could have took you along right there. Cloud's telling you to anyhow, right? That's a momentum play. There's you along. You know what I mean? Something pretty simple, not hard to do. And then here's another one where you can take yourself on a 12 o'clock box. Well, you knew you had a momentum long right here, right? Momentum brand poke long up to the next one. Well, it pulled back into the box, the 12 o'clock box. Well, there you go. Take you another long. You sold this one already. Well, take you another one right here and sell it up here at this box, the 9 o'clock box. See? That's how you can use these things as support and resistance throughout the day, and you're never lost. You're never, ever lost. And now that you have gotten yourself, or, the market has gotten itself green for the day, well, you got to be somewhat bullish about that anyhow. And obviously you're looking for bullish behavior, especially above the range. You're looking for bearish, behavior below the range. So that's kind of the way it is. And I mean, if you were, got yourself in a bind up earlier in the day, there again, the closing range is support and resistance as well. Let it pull back into it and take you a long off. Now we don't have levels up through here, but you just take you 13.75s and just whatever you can get yourself paid. There's 13.75, 27. I mean, you would have made absolute bank just putting 13.75 levels all through up in here. You know what I mean? Granted, I'm not sure if you'd have that many contracts on, but still, that's how you could play that, and never have actually been lost in the whole entire day. You would have been grounded and had context on every piece of it. So that's kind of how I would approach Friday. There again, that's hindsight.
Closing range box.
And so the closing range box. Hold on a minute. Let me delete this rascal right here. So this is Friday's. This was Thursday's closing range, and I'm using it for Friday's price action. Okay. So let me delete this because that's no longer useful to me. And let's draw this week's or this upcoming session's closing range. Okay. And what we're going to do is look for the close. And it's pretty evident which one it is. But we're going to find the one that has the most amount of volume on a 1 minute chart. Right here it is. It's a 359 candle. And that's the one that we box. We only box the body of these candles. We don't box the whole things, just the body, open and close. And there you go. There's your closing range for the upcoming session that you're going to be using tomorrow, right? And say, look right here. Like, this is the deal, right? It broke above it, pull back into it. You know what I mean? Off she goes. I don't know if that's going to, I mean, but, you know, there again, that's just late volume nonetheless. But that's kind of what you're looking for. You know what I mean? Let me get a, where in the world? So you're looking for longs above. I mean, realistically, you'd want to see something like this. Get far enough away from it and maybe look to take a long right here, you know, up. And if for whatever reason price just come down here and it just blowed through this, look for price to kind of come down in here. And this is where you look for opportunities right here on this retest. And that's where you take your trades away from them. You know what I mean? This is kind of diddling in the middle. You don't mess with it. You know. And you know, when you're messing with this stuff kind of like this right here, oh man, what did I do? Be mindful of the cloud, right? Where is momentum at? You know, obviously momentum is telling you, you know, down is the way to go, right? So if price come up here and touched it, right? You'd be reluctant to take that long off that box. Granted, don't mind the time of day right here that we're, you know, because there ain't nobody taking trades right here anyhow, you know, really, new positions or whatever. So if the cloud is telling you, you know, momentum is down, I mean, you wouldn't be taking a long off this anyhow. You know what I mean? That's just not the way you'd play that. You could play that as taking a short off the cloud down to the box. You know what I mean? Or if price for some reason was down here, you know, below this thing and had gave you some daylight, then you could take a short off of it, you know, off the box with the cloud being purple and say you touch the top Bollinger Band, you know, into the closing range. That's a great short, right? You had confluence. Build you a case to take that short. Don't just take it, right? Or whatever. But like right here, you see the opening, you know, the cloud is starting to turn, you know, for some bullish behavior. So now you can build the case. Okay, well, how does this long look? You know, let me get a brush here. Sorry. How do we take a long right here? Well, we know the cloud's supporting the color, right? The upward momentum now. So what you would want to do is you'd want to see this Bollinger Band kind of do something like this. You know what I mean? Maybe something like this. And you'd want to see price come down here and puncture that Bollinger Band and take back off, right? And then Bollinger Bands open back up. You know what I mean? And price just come in here, poke it, and then take off, right? With the cloud still being, you know, showing bullishness. So that's how you could possibly do that. How long would look like, I guess. Get rid of all the stuff here I've drawn all over this. If you guys got any questions here, man, I mean, now's a good time to get them piled in, and we'll hash this stuff out. Because I know, you know, I just stay busy, and I ain't able to answer a lot of questions that you guys have throughout the week and in chat. So, this is realistically some of the best times to really get your questions answered and points across. If y'all
Hey,
got them,
Mag.
let's hear them. Hey,
I have a question. Again, sorry.
no, man. Let her.
On the 12 o'clock, I'm sorry.
I said, yeah, let her out. It's whatever you got. We'll answer.
On the 12 o'clock box,
Yep.
there's a 118 test, the 118 candle in the 1 minute test. It tests that box and then took a huge long. I guess what I'm wondering, because I've really been looking at some of the CK stuff, and I'm starting to see a lot of potential there, but I haven't really done much testing with.
Yeah, yeah. I mean, that is a good long, right? And you're building a case for the good long. So, and that's what it's all about, right? Is we're trying to build that case of is good longs the best way to go? And it's showing you, right? Obviously, this has been, that's a hell of a move up. There's no doubt about that, right? So yeah, you would, if you're trading this on a 1 minute chart. But keep in mind now, if you're trading this on a 1 minute chart, keep your targets a little smaller, because it's going to fall apart on you, right? You're going to find a hell of a lot of potential shorts to take up here, right? Or reversals if you're on a 1 minute chart. So, and I'm a big advocate of, hey, if I'm going to take a long right here, I just like to stay long until I find a good reason to go short. You know what I mean? And where does that happen at up here? You know what I mean? And lots of times you'll find yourself, if you're stuck on that 1 minute chart, you be trying to find yourself getting short up in these somewhere up in here, some of this stuff, and it's easy to do, and ain't a thing wrong with it. But just know, if you're trading on a 1 minute chart, your targets most likely are going to be smaller. So if you're trading on a 5 minute chart, your targets are going to be a little bit longer. But that didn't answer your question. I'm sorry, I got off path there. But yeah, so resistance was broken, pulled back into it, right? And indeed, that is, once it's retested there, that is deemed to be support. And there's nothing wrong with that, because you've got the cloud telling you, hey, momentum is up. Let's roll. You know what I mean? And that's the first test of it, which is usually one of the better ones. I mean, the only other thing that can make this any better would been if the Bollinger Band come up in here and this was a poke of the Bollinger Band, but it didn't. But that didn't mean that you couldn't take it. And you could take that thing right. Right there. You know what I mean? That would have been an ideal spot to cut it loose. And if you were long multiple contracts, I mean, I don't know where you would stop selling them. You know what I mean? Like, it just 13.75 is the only place I can see that you know what I mean? Just every 13.75, sell them. You know what I mean? Until he just couldn't sell no more. Especially on this 1 minute chart stuff. I don't see a case to go short right here. Nowhere. Absolutely nowhere. And right here was an over-under setup. No. No, it got invalidated right there. Never mind. I was going to say that was an over-under setup. Yeah, technically this was, actually. There's you an over-under setup. Right? Well, no, it wasn't either, because it didn't make it. Sorry. That wasn't one. The hell ain't nowhere to sell. I mean, you couldn't sell right here. You know what I mean? Like, there's nothing to tell you, hey, to sell. Like, it's just gone, man. That's a hell of a good spot. I don't think it gets any better than that spot. Because,
Mag.
Hey.
Hey, Jittery here. thinking of this logically, when you have you know a group of new traders going into the market, this is new market participants at each of those rotation hours. They have a specific sentiment, which is where those volume bars, they agree at a price, and that's where you're closing out the range um, on that 1 minute candle. And on the retest, when whether or not their bets are correct or incorrect, that's you get a little bit of confluence on the Bollinger Band standard deviation play on it. That's where you get those big plays. That's where your A plus setup is. So I had to sit there and kind of think about this logically to see what is the what is the action behind the candles and the charts for it to make sense. And I think that's what I came about. If I'm incorrect, correct me. Um, but but you're basically trying to see any sentiment changes during those new market participants, which are at rotation hours, which are different sessions that are opening up. So China at 3 o'clock, Europe at 6, and the U.S. around 9 o'clock.
No, man, you're 100% right. You have hit the nail on the head. I mean that's the idea, right? Because we've got a whole brand new set of guys coming in ready to play ball, and we don't
Pockets
know
full.
do what.
With their pockets full, and
Yeah,
they're ready to
absolutely.
put in. Yeah.
And that's it, man. I mean, it's not. Yeah, you're 100% right. That's exactly what everything of this 3, 6, and 9 is deal is about. I mean, it is. That's where the most amount of opportunity is, right? And it's you know what the previous opportunity was, and now you're looking forward to the next. And lots of times it's not so much as just a rotation up, a rotation down, a rotation up. It's very much a rotation up and another rotation up. You know what I mean? And it can be even another rotation up. But these boxes allow you to pinpoint, and really all these boxes are is just risk. If you could just say that, that's probably the best thing that there really is just this is risk for us as people who try to take advantage of, folks that have more money that move these markets. You know what I mean? We just define our risk by these boxes, where they stepped in and what they were willing to do when they stepped in.
So
Uh,
then, a attached question to that. So if that is correct, so let's say the China sentiment is upwards. So is the Europe and the New York is upwards. You have three confluences in the direction, and you've been in trade since China open.
mhm.
And is that where you are setting up the 110 points above the closing range? I may have missed that, so I'm gonna speak out of turn on that one because I'm not very familiar. So let's say it's broken out. All three sessions are bullish. All the market participants want to go long. What will be your last target after all these levels have been broken out and it's still continuing to go up higher?
um, well, the 110 level was brought from both, and I haven't visited that in a while, to be honest with you. I need to go back through the open interest and make sure that it matches up with like the volatility that we're seeing on the VIX. Um, and just make sure that 110 level stays that's still standing. And it's probably not. We've picked up in volatility, and plus we're at much higher prices. So that 110 level is probably more like 120, probably 130 now. I just have to go back through it and see. But it's one of these deals where you can, if you're setting these targets out, is just use the open interest book, right? Um, so where folks have stood in and placed a bet via the open interest. So if you use that, what is it, CME open interest heat map, I think it's what it's called. And you just go in there and you can find where folks are, where some of the underlying's at. You know what I mean? And typically those are big targets and those are good targets. But if you want to if you wanted to stack, say, 110 levels from the overnight low, just say, I don't know, let's just say this is an overnight low right here. Okay, and we stack 110 level in right there, stack another 110 level in, and it's stack another 110 level in. You know what I mean? And that just kind of gives you, some context, right? Um, and that's one way to play it. But I mean, I'd never sell, if I felt like the market was going to continue to run, I would just stay in it until I could find a reason to short it. You know, that's typically the best medicine. You know what I mean?
Makes sense. Makes sense. Thank you.
Ain't no problem, man. But don't forget to pay yourself. Oh, that's the biggest thing. Because I often thought about that. I was like, well, hell, I can't just tell everybody to go long and stay long till the end of time. It's just like the only way you can do that, and the only way it makes sense to do that, because I don't know. You know what I mean? Just say we don't know if you're 100 points up on a trade, and that's the time to take a profit. Like we don't know that, and it could easily come back and take you out, and you just wasted a ton of time. But we don't know those things. So it's one of them deals where you just have to stay on course until you find a reason to otherwise, And typically you can find a reason, just are you willing to take it?
Makes sense. Makes sense. And that's most of the time, as you have your runners left over, you wanna let that runner, as you're taking 13.75 off each level, you want to let that last runner, as your lotto play, whatever you're setting up as your setup there, take it off of a plus setup on the short side, or an A setup on the short side at an extreme level. I would assume that's what I would be looking for.
Absolutely. Yep. Absolutely. 100%. I agree. That's the best way to do it. I mean, and that's how you maximize your opportunities, for sure. Yeah.
Thank you, man.
Hey, no problem. Hey, one other thing, guys, I want to show y'all real quick is I was looking at this. Y'all lots of times y'all hear me talk about late buys and early sales and early sales and late buys. I want to show you what I meant by that. And here, we knew obviously the Bollinger Band. This was an A plus setup right here. We knew this, but we knew coming into this. So just say none of this part existed, right? And we wasn't aware of that. All of a sudden, we just seen this price just continue to hammer down, hammer down, hammer down. Well, momentum's telling you it's down, right? Well, where do you need to start lifting off the gas pedal? You know what I mean? Like, where does it make sense? Hey, it's getting a little long in the tooth. We might think about, loosening up here, or maybe even reversing. And it's a lot of it's got to do with, if you notice how late buys come in, you know what I mean? Like these, if you notice this volume bar here, this volume bar here, this volume bar here, they all come in at the top of a Bollinger Band. You know what I mean? Well, who's buying right here? Folks that just ain't got a damn clue who's buying right here. You know what I mean? They're about to get whacked, and sure as the world, they did get whacked. Well, how in the world can you take advantage of a move like that? Is over here, we're at that 3:00 hour. We knew that was a rotation hour, or at least where a lot of folks were going to come in, right? Like Jittery said there. So what are we looking for? We're looking for late sales. Folks that come in here and are trying to sell this thing late. Well, the way you can tell that is this volume. Let me quiet somebody down. It never fails, man. Of all people. Damn it. Patience. Okay, we got it quiet up. But anyhow, you had late sales come in. Right? You don't want to see high volume come in on the sell side on the bottom of a Bollinger Band, because that tells me that all these folks that got long up here, this is where they rascals got squeezed and had to sell their position, right? This is where they got screwed, only for the price to go right back the other way. But anyhow, this is how it happens. This is the trap trader part, right? And what Bobby was talking about, this is the CK strategy, right? This is the combine killer. You're watching multiple strategies play out into one right here. And that's how it happens. So if you were trading a combine killer, you're looking for volume. You would box this candle because that's the candle that's got the most amount of volume. Okay? Sure as shit, if you didn't even draw this 3 o'clock box, you didn't draw the Bollinger Band box. Anyhow, it's all relative. You had price come up here, go above it, come back into that box for the combine killer strategy, and that made it an A+ deal, right? Right there. Even on a combine killer. But nonetheless, go back to what I was originally talking about here. You knew you had late sales coming in, all right? And all of a sudden, you start seeing these early buys come in, right? Like this buy right here. It come in at the bottom. Now you see these late buys or early buys come in again down here at the bottom. But you're not seeing any more late sales, right? Which telling you, you've seen the late sales and early buys. You're seeing early buys come in down here at the bottom. You know what I mean? Which is indicative of a turnaround, indicative of some type of rotation about to happen. And it just so happens to be all within that 3 o'clock hour, right? So you had the combine killer, you had the Bollinger Band strategy, you had the 3 o'clock box support resistance deal going on. You had the cloud telling you to take a long. Like they was and the Bollinger Band poke telling you to take a long. Everybody was screaming at 5 o'clock in the morning to take a long with these late sales, early buys, everything screaming long, 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 long. You know what I mean? And that's how you play it, right? And that was just a absolute ripper. And these guys totally got hosed. They were buying late, right? Into what was a move they were buying late, right? I mean, really, that wasn't a bad play, but they should have been doing it down here, not at the top of a Bollinger Band. But anyhow, that's what happened, and that's what you're witnessing. All these buys that bought right here are getting absolutely smacked. They bought right there and right there, only to get squeezed out of their position. Wait a few minutes, watch it turn around and rip right into their face in the direction that they wanted it to go. It's cruel, but it's true. It happens every day. But yeah, that's one of the things I wanted to show you about them late sales and early buys. It's interesting to see how that all plays out, you know. Well, guys, if y'all have any more questions here? Oh, I got somebody.
How do you deal with keeping it disciplined? And I mean, watching the strategy now for like 3 weeks, and I love the simplicity, but man, having the discipline to wait until the setups there can be trying times, you know. So you doing that between the 1 and the 5 minute?
Oh, I mean, if it's there, it's there. You know, I mean,
Yeah.
You got to think about time spent, right? I've been doing this stuff for a while, man. This is, it's the newness is wore off for me. It's not as exciting as it used to be. You know what I mean? So I don't always feel like I have to be a part of it. So that's a big factor. But then there's also the factor of this. Okay, say for instance, I'd have a hell of a good trade at 3 o'clock. I'd have another hell of a good trade at 6 o'clock, and have a good trade at 9 o'clock. Well, I took a trade here, I took a trade here, and I took a trade here. I had a good trade, lost my ass, good trade, lost my ass, a good trade, lost my ass. And now, let me show you something. If I took 1, 2, 3, 4 losing trades out of the picture, I had 3 winners. That's how you're able to sell in your hands. Self-audit, man. Self-audit. I took away 40% of my losers away just by simply not trading. That's incredible. If you think about it, that's an incredible number. So I don't have to work nowhere near as hard and make 40% more money. You know what I mean? It's like at a minimum 40% more money. It's just incredible amount of money you get to keep by just not trading where you shouldn't be trading or when you shouldn't be trading. You know what I mean? There's a time and a place for everything, and just waiting for that is probably one of the hardest things to overcome. But once you self audit hard enough, you'll see that. You'll say, okay, well, damn, I've been making, you know, on an average, $1,000 a day for weeks now by trading at 9 o'clock in the morning. From 9 to 9:15, that I made $1,000 every day. Or just for the most part. Well, then I turn around and lost $700. From trading from 10:30 to 11. Well, if you look at that and you self audit that enough, you can say, okay, well, shit, I don't need to trade anymore from 10:30 to 11. You know what I mean? Well, there again, I mean, you just wiped half your losses out by just not even participating. So those were the self audits come from, and that's again, if I'm only taking trades based off this 3 o'clock, it didn't have to be okay. I'm taking a trade at 3 o'clock. I'm taking a trade at 6 o'clock. I'm taking trades based off that 3 o'clock in the morning, right? At 5 o'clock in the morning, I'm taking that long that was all set up at 3 o'clock in the morning. You follow me?
Yep, that's perfect.
That's it, man. Just self audit and self audit hard, and I guarantee you, you'll see it. You'll see it. It took me longer than expect, longer than it should have, but I'm hard headed as all get out. So.
And so, if you don't mind, if I chime in too for a moment on his topic, somebody told me when I started trading, he said the big boys are always going to make money. It's you got to find the little guys that you can take money from. So, with max rotation hours, you're looking for those trap traders. You're not going to take any money from the institutions. So it's either you are giving somebody else money or you're taking money from them. So before you enter a trade, you think about that. If it's a, when I look at mag strategy, if it's not an A plus or a real good A setup, do you really want to take it? Or do you want to give that money back to somebody else that's going to take it from you? And that might deter what trades you're going to take or not take.
Yep. That's it, man. That's it. That's the name of the game, man. I mean, you got to be disciplined, and there again, it took me forever of a long time to be as disciplined as I am, and which I was already a profitable trader before I went through Top Steps deal. But I'll be honest with you, I think that was a little piece of the missing puzzle, man, that kind of got me a little more disciplined. I mean, and really, kind of set it in stone where I don't know if I could trade the size that I trade without going through Top Step stuff, because the amount of discipline that you have to be successful long term through Top Step is you just got to be disciplined, man, and you cut them when it's wrong and let the winners roll. You know what I mean? That's the name of the game, trading through them. You know what I mean? You can't open that risk up at all, and especially if you're using size. And so I trade size like most people trade 1 or 2, 3 contracts. Just because I'm keeping my defined risk so defined. You know what I mean? I know I'm right or I know I'm wrong, and I'm willing to cut it as soon as I know I'm wrong. You know what I mean? That's kind of how the way I play it. But it's experience telling me to that, right? It's those self audits, you know what I mean? That's telling you, hey, when you're wrong, you should be wrong pretty quickly, and don't stretch it out. No need to let the pain continue.
Hey, Magnum, did you take any trades Friday?
Not the first one, man. I was actually busy with work. I wasn't able to get tied, get freed up to get tied in there and take a look at them, but I did not.
Okay. Did you take any trades Thursday?
Yeah, I think I had a short Thursday, I believe. Yeah, I think I took one trade Thursday. I think I had a short, I believe. Oh, I can't remember, but I think it was a short.
So the one question that I'm kind of curious of is, like you just mentioned, you're your trading size. A lot of individuals in the room trade maybe 1 to 5 contracts. But you're trading 20, 30, maybe more. So you said you put 2 to 3 contracts every tick into where you're looking to enter a trade. Do you have your stop set already? So if you're going to scale in 30 contracts over a range, do you have a 30 contract exit put in on the ladder already, or do you wait for the fills to actually occur before entering your stop?
Yeah. So, yeah, I mean, here's why I have to do that, right? Is because, um, this is the short I actually took. That's what I was just looking over. I think that's the one I took right there. Yeah, I got short on this candle. All right, so let me show you how I'm gonna have to do this. And this is the only way you're gonna fly below the radar. So beware. All right, and I'm gonna have to represent my orders as horizontal lines, and I'm gonna show you. Okay. Let me get it stacked up in here. So I'm gonna say I wanted to get short at 70. I'm gonna put an order there. At 70, I'm gonna put an order there. I'm gonna put an order there. I'm gonna put an order there, and I'm gonna put an order there. Oh hell! Let's just make it easy like that. All right. So I'm short 3 contracts, 3 contracts, 3, 3. So 3, 6, 9, 12, 15 contracts. Okay. That's the way I'm gonna short it. Now I can't short. Say if I wanted to, I can't put 5, 5, and 5. Right. Well, you see 5 hit the DOM, things happen. You know what I mean? You see 3 contracts hop up on the DOM. You know what I mean? That's kind of nothing. That's not nothing. But you're not knowing, holy hell, this guy's got 15 contracts. You know what I mean? Like you don't know this is one position. You know what I'm saying? It just allows you to hide a little bit better. So if my 70, so if my 70 is my entry, well, just assume that my back entry is going to be at like 83, right? 13 and a half, 7 points. So just say right here. There you go. There'd be my stop. You know what I mean? Does that make sense? So, and I'm going to stack these in because I can't just stack them. I just can't hover, 15 contracts right here at 83. You know what I mean? You're going to reveal your position. You know what I mean? You've got to layer those things in order. And as soon as this order is filled, by the way, it comes up in here and fills you. Yes, this becomes a live stop. You know what I mean? I mean, until this is filled, no, none of them are live. Does that make sense? So these are your contingent orders. So my brackets would be set up to look something like this. You know what I mean? So if price was coming up in here, these were my sell orders. Well, these are my bracket stop orders. So until this thing is broken, these orders never even show up. You know what I mean? But they're stacked in here just the same as these orders are stacked up, right? Because if I'm wrong, I want to be wrong at 13.75. It shouldn't go there. You know what I mean? It should not roll past this, right? It may roll past it 6.5 points, but it shouldn't go another full 13.75. And you know what I mean? Because that's where the structure is, right? It shouldn't go there. If this trade is correct. So
okay.
That's how I do that.
I see what you're doing. So basically, if you're looking at order flow and someone drops 30 contracts on there, the market's going to want to fill that, and it's going to have to push up and through it in order to fill that. But you're flying by keeping with the current book, right? By saying, the book shows statistically and conservatively 2 to 3 contracts. So I will enter 10 times with that amount, that size over that range. And when you put those on to be filled out, you just said that you have a bracket order that automatically puts the stop in 13.75 points higher from that first entry. So
Yep.
if it does fill you all the way out on 15 contracts, and for some reason it goes batshit crazy and just goes straight up, you're immediately back out again.
That's it. Yeah.
Okay. See, this was where I was getting confused, because with one contracts, it's easy, right? You have time to enter and exit if you need to, adjust your stop. But I'm like, how does someone do it that's trading 30 or 15 or 20, right? And you're doing it that way. And then you're not putting your stop at the top of that candle or at the top of the box. You're putting it 2.75 points higher.
Yeah.
Because there's often times where that it'll come in, fill you out, and actually wick out of the box and then come right back in, and then the trade progresses. So like there's times where I've not limited in, I've marketed in, because I've seen that happen where it goes and pushes back down through the box, and then it would realistically take you out, right? Because your stop's below the box, and then that candle would continue to be a rejection candle, as it would get filled in the upside or downside depending on how you're trading, and then move forward into the direction that you were anticipating it to move forward. So I tried the limit, and it would take me out and then move forward. So then I was like, all right, well, let me wait for the rejection to actually form. And since I'm just learning this specific one, I'm not going to have size. I'm just going to limit one in, or market one in if that candle rejects into the box, right?
Yep.
So, okay, that makes a lot more sense. And I've noticed too that those boxes that you're drawing are valid all day, right? Even though that you might miss a setup at that time period, the setup might re-represent itself at a different time of the day where that box is.
Absolutely.
So like the bottom of the day there, where you've got those little green dots, that was a long that actually I got in on, not down there when it pushed up and made that big bullish green bar.
Yep.
I got short, right? Got out and reversed and went long.
Oh yeah. So I mean that's the perfect idea, right? I mean it broke support. Broke resistance, pulled back into support, and took right back off to the next support, or next resistance level. And then hell, just walk the ladder up, really, is all it did. Just walk,
Yeah, so actually I was trading those as imbalance bars as well. Something you might want to read into, where you have big bars like that, right? Where there's no wicks to the top or the downside. There's all that unfinished auctions going on in those bars because the market just blew right through specific levels. So the market makers want to come back down and finish of those bars. So you can actually see where that hangman doji, but still a bullish candle, like the hangman doji right there, that last green dot on to your left there, that last one. So there's that big giant wick up, right? And then there's the big giant green bar with almost no wicks to the up or down. And then you've got that little tiny red bar to the right. If you draw like that whole big green bar, the auction's filled in that section, right? Because it overlaps with the bar on the other side.
Yep.
And it does the same thing for the next bar, that big green bar, right? Yep. And does the same thing on that bar to the next to your right, that another big green bar.
Yep.
So those are called imbalances, and you wait for price to come into those levels. And what I was noticing was those levels were also lining up with those freaking boxes. So I was like, this is where you're going to go long. And I was stacking orders on the micros on that side. So because it was starting to move, and got in on those imbalance bars on the long side.
Beautiful. I mean, yeah, it's that's an interesting way of looking at it, but yeah, I mean, it works and it makes perfect sense, right? I mean, that's where the market should have bounced right back off of, on the imbalance side of it.
Yep. Yeah, it's like looking at the actual auction inside the candle. Like if you look at order flow of what's actually transpiring from a transactionary standpoint, you can see that there'll be on those big green bars that those are imbalances, and they want to come back in and take in all those extra people buying, right? That didn't get filled out. because the market wants that liquidity in there.
Absolutely. Absolutely. I mean, it's kind of a onside of the CK deal, right? Except going the opposite way. I mean, it's the imbalance of the balance.
Yep. Yeah. Okay, so I understand, because this is where I was really struggling to understand how you're entering some of these trades, and then when I look at them, I'm like, I don't know how he's getting 15 contracts right here, because the box is either tiny or it's it only goes in like a third of it or something like that. So that makes more sense what you're doing, where you're putting every tick in your as it enters, the stop automatically goes in 13.75%, 5 points lower, because you're saying if it goes that low down, if it goes there and takes you out, the trade's invalid.
Yeah. So if I was trading Friday, like if I was trying to trade and get long here, right, I have to assume, because they're again of the size. So I would put an order here to buy, order there to buy, order there to buy, order there. You know what I mean? And I'm just stacking orders. So if I'm trading 15 or if I'm trading, 30, I don't know, whatever I'm trading, it all depends. I'll have them stacked up there. You know what I mean? And I might put one or two inside the box. You know what I mean? But I have my orders stacked up right here. So I have to assume more risk than somebody trading 3 contracts at a 1 gig deal. You know what I mean? Just a 1 deal, 3 contracts or 2 contracts, right? Because they can put it right here, and hell, they don't have that kind of risk. You know what I mean? But in order for me to be able to hide, I have to do that, And then there again, my stops are down here, that may be triggered, or whatever. But that's kind of how I play the boxes. I have to front run them just a hair, because otherwise I reveal a lot. You know what I mean? So
yeah, because once you place orders into the market, those orders are now passive buys or passive sells, in which people that can see the full depth of the market see that information there, right?
You got it.
If they see a whale or whatever sitting there with 50 contracts on the NASDAQ, the market A is gonna want to take those, and B, other people are going to see that as well, and might position themselves there either. And sure, you might get slippage because now have a big auction down there and they've got to fill that auction. So there's got to be sellers willing to sell those contracts to you as a buyer.
That's absolutely correct. And I've tested with 4 or 5, and I'll be honest with you, the only way that I can avoid slippage is 3 or less. And the slippage is always undesirable. You know what I mean? It's so realistically, the slippage part would put my stop at a much lower, a much higher price than I want to be. You know what I mean? Because of the slippage. So in other words, my stop would be up here, and I wouldn't be able to get it back behind that 13.75 structure. So now I'm taking on 17, 18 points of risk for that same, just by taking off 1 contract on a block of 3, and rather adding like 2 more blocks of 3, which I could have saved myself and had my stops down here to not have that, slippage to where I put my stops in harm's way. You know what I mean? Because realistically, you don't want to risk more than that 13.75, but to keep it out of structure's way, you got to put it at like 18 or 19, Tough stuff. It's just illiquid, right? It's the problems that you deal with an illiquid market, typically. ES is no problem. You can smack the bid with 20 if you wanted, but NQ is different. All right, guys. Y'all got any more questions?
No, I really appreciate your time, though. This is it's becoming pretty sweet, and really appreciate your time.
Hey, no problem, man. The least I could do. I know it was getting, this is kind of a new deal here, and it's just a lot of folks come in here and help the community and put this stuff together, man. So I just wanted to make sure that everybody was on the right page of why and how the boxes got drawn. and stuff. So no problem, man. Just everybody doing their part. You know what I mean? Well, guys, if y'all are good, I'm good, man. I'm gonna cut her loose.
Thank you so much, man. We really, really, I think I speak for everyone when I say we really, really appreciate your time and all your information.
No problem, bro. Least I could do, man. We
Thanks,
always pay it for. See you guys.